Hi, in this video, I will endeavor to share my thoughts about how I plan my trades, how I think, and the kind of background work that goes into finalizing a trade, fine-tuning the entry and exit points, and the rationale, the logic, the reason, the method behind the madness. By this video, I attempt to basically familiarize yourself and myself with each other so that our thought processes are fine-tuned together. This video is specifically targeting my weekly cash alert subscribers as also my fast profit reports friends here. But you're welcome to watch this video even if you're not a subscriber of any of my screens, but just simply a viewer of my Fast Profits daily videos. Now here, I will basically also emphasize on the recent trade that has been occupying top of the mind recall in natural gas. What went on, how we think, how we go ahead, and how we'll basically be trading even in the future. I'm Vijay Bambwani, and if you've liked my videos, if you think I've helped you become better traders, I urge you to subscribe to my YouTube channel. Click on the bell icon to receive instant alerts about fresh videos that I will upload. And in the comment section, do let me know what you think of my videos and what else you would want me to record. I would also request you to help me reach out to a wider audience which requires knowledge-based investments and trades with a 360-degree worldview of the financial markets by recommending and referring my videos to your family and friends. So friends, let's dive right in. Let's go to natural gas and why I recommended what I did. You see, from calendar year end of 2019, I gave you a very simple strategy that natural gas tops out around Christmas to maybe a first fortnight of January. Now, this is a routine phenomena seen over a few years, almost a decade. The time period might just vary a little bit by, say, a fortnight or so, and there, of course, have been weather conditions that can vary, and weather, as you know, is under nobody's control. So there are certain variations, and like I've said, every trade that you initiate in the market is like a military exercise. I would call it war by any other name. Now, nothing goes exactly as per plan in combat, in war. You will have to adapt, you have to keep improvising, and there are times when you may not even win. So it's part and parcel of the game, but the broader game plan, as long as it is in place, the probabilities of success are significantly higher. So natural gas, in my previous videos have said, should be short sold around end of December, if not the first week of January. Now, this year, what has happened is the polar vortex came along. This was a very, very challenging time for natural gas traders right from the hurricane season, for the simple reason that the US hurricane activity was its highest in 116 years. This is something that I've recorded in my earlier videos. Now, the polar vortex has split like two legs. One is hitting Northern America, the other has hit Northern Europe. Now, gas being gas used for heating purposes, the consumption in the winter months has simply skyrocketed, which is why the prices of gas went up. But what many of you did not realize was that there was dirty tricks played. I will explain to you how. Now, what really happened was that the traders actually got carried away by the fact that demand would rise and supply may not be able to keep in sync with the demand, and therefore they started marking the price of natural gas higher. I actually got a lot of feedback from my viewers, from weekly cash alert subscribers. I don't doubt their intentions. They're all well-meaning folks. Hey, your feedback is welcome. It is cherished, and I actually seek your feedback. So, well-meaning folks started forwarding me reports about what certain analysts, what certain websites, what certain publications were forecasting in terms of natural gas prices. No harm. The only thing is, when you're bombarding yourself with research reports from various quarters, do remember that a research report is nothing but an opinion. It need not be 100% fact. There is always a certain amount of conjecturing, certain amount of even guesswork. And if it is coming from sources which are non-market participants, non-traders, there is also a huge amount of biases, guesswork, and not always 100% honest. So, these gas prices, remember a couple of years ago, the world's biggest investment banks were talking about natural gas hitting $10 to $12 per MMBTU. You heard that right. $10 to $12. Those were the kind of stratospheric targets that were coming in. And yet, gas could not go beyond $3.88. Guess what? Nobody remembers to ask questions later. But in the heat of the moment, you do tend to get carried away. Now, why was I so adamant about the natural gas trade? I'll share my secrets with you. There are two factors which drove the prices higher. One was the Japanese-Korean marker, the JKM. Now the Japanese, due to the reasons, emotional reasons after Second World War and suffering two nuclear explosions, do not use nuclear energy very easily. Therefore, they depend a lot on liquefied natural gas and even CNG to generate a lot of power. Now remember, the cold snap has hit Japan also. In this contrived, I will use the word contrived in an accusing manner, in this contrived shortage of very large gas carriers and tankers, people started floating a lot of reports in the public domain. Remember, in the electronic media, especially online, it doesn't cost much to upload an HTML page as a research report. I was hearing bizarre stories from people who were self-appointed experts who said tankers will charge up to 500% of their normal cargo rates to ferry fossil fuels. This was just last week. And guess what? Everybody from the news media to online news publications, etc., were telling you all bullish reports. On Tuesday, while surfing the internet, I found a very curious item. Because of the Saudi output cut of oil and the feared demand contraction due to lockdowns in many European cities, the tanker owners were actually willing to pay to move these cargoes of fossil fuels. Do you know the tanker operator will actually pay you money to ship your cargo from point A to point B? This is bizarre from two aspects. Just last week, the experts were telling me I would have to pay 5 times more than the usual rate to ferry cargoes. And a week later, the tanker guy comes and says, hey, I'm going to pay you to ferry your cargo. Just keep the relationship alive. This is like crude going into negative prices in April 2020. Alright? This is as bizarre. The second, the Dutch TTF, Title Transfer Facility, prices went up to 22-year highs. Now this is basically spot pricing, where people, when they are completely cornered and want supplies in an emergency, The Japanese, for example, buy a lot of their natural gas and LNG from the spot market, and the spot market is extremely volatile. The spot prices can be a few times, I'm not saying a few percent, I'm saying a few times higher than the long-term contract supply prices. So what the traders got mistakenly taken up by was the fact that the Dutch TTF, the title transfer facility rates, and the Japanese Korean marker prices hit multi-year highs. But here is the catch. This is the gist, the crux, and the heart and soul of this video. I want to ask you a question. What if at the fag end of the trading session in the equity market, I was to buy 2 shares of any scrip at 20 rupees higher than the prevalent price? Would that price not get included in the open high-low close of the day? Yes, it would. Yes, it would. But remember, it was only 2 shares. It doesn't really matter. So if you actually peeled the layer of information after layer after layer after layer, you would reach the core of the information. The core of the information was that the transacted size in both the Dutch title transfer facility and the Japanese Korean markers was like those 2 shares. Yes, the price got noticed. It triggered an alarm. It triggered a short squeeze. It triggered bear covering. Unfortunately, I had recommended a short and people started running helter-skelter. Some of you even got agitated and sent me emails which were frankly a bit upsetting. Nevertheless, this is a video in which I want to build the bridges so that we are like a motorcycle racer and a motorcycle. In a motocross race, the motorcycle and the rider fuse into one entity. Both trust each other. Can you imagine a motocross champion racer on his bike taking a sharp 40-degree turn at a speed of 200 kilometers per hour, and if he starts doubting that his bike might develop a blown tire or his spark plug might just short circuit, will he be able to race in that race if he loses confidence on his bike? So I, as your editor, and you as my subscriber, have to develop that bond. I'm sharing this information with you so as to understand the level of depth, the level of research, the level of fact-finding, the level of human intelligence gathering that we go into before we recommend anything. Can we go wrong in spite of that? Yes. Hey, remember, natural gas is dependent on weather, and weather is controlled by God, not by man. I don't claim to have any control over weather, over wars, over earthquakes, over untoward incidences which come without a warning. So we might still go wrong. But if we fail, like sometimes some trades do, it will not be because of want of effort and want of due diligence, but because ultimately, once in a while, you do take a trading loss. But what really happened? The market erred. The market was wrong. It assumed that gas would run out. The market even bluffed, or at least some market participants and experts may have even bluffed. But gas prices have for the last few trading sessions collapsed. Collapse is the right word. And we are back to where we started, and we are basically back to levels where I initially came out with a recommendation. So patience is sometimes required, because do remember that this is a commodity trade. Unlike equities where the supply of shares, the paid up capital is constant, commodities are basically dynamic both in demand and supply. You dig a little bit into the ground, you'll find a lot of supply of commodities. So you can't keep pushing the price of a commodity and make it go 5 times, 10 times and 20 times higher like an equity share. As long as you don't take leave of these basic elementary aspects of trading, you're going to be just fine. I hope I have clarified my position as to how I will be recommending as an editor more and more trades in my videos, in my emails, in my newsletters, in my mailers, and how I'm going to share even the method behind the madness. I don't mind opening out my book of trading ideas. I keep no secrets from my subscribers. We are one giant happy family, and I endeavor to build trust through this video. On that happy note, I'll say goodbye in this video, not before reminding you to take care of your trades, health and investments, and wishing you a very, very profitable day ahead. Thank you for your patience. Thank you for watching me. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.